Hey, Tax Hacking Tribe. I'm glad that you decided to join me today. I'll take a few minutes of your time. I know it's the end of the day. You've had a long day, and now you're here, and I do appreciate that you've decided to join me to hear all about how you can get paid and save on taxes. That seems almost impossible, but trust me, it is true. You can. Okay, so we talk about reasonable compensation, right? And that is the key for you to be able to get paid and save on taxes. The IRS talks about compensation, and reasonable compensation is made up of several factors that they take into consideration when they're thinking about what is considered reasonable. So, in other words, you can't have $100,000 in profit and take that and say, "Oh, that's reasonable compensation. I now have zero taxable income." No, 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 no. So one of the first things that you would have to take into consideration is the nature of the work performed. What type of work are you doing for the compensation that you're taking out of your business? Second, what is your qualification? Is is your does your qualification match the salary that you're taking out of your business as payment? What is your company size? Are you a solopreneur or are you a company of 10 or 100? What is your financial condition? The government wants to make sure that you're not taking all of the monies out of the business and not leaving any money to run the business. And of course, one of the key things is the industry standard. What are other people getting paid that are in the similar industry to yours? To avoid a challenge from the IRS, I encourage you that you should first look at it is essential to look at these factors when setting salaries for your officers and your owners. And in many cases, the officers and owners are you yourself. So now next, let's move on. Now we're going to talk about how do you multiply your net worth as a business owner. You know, let's just pull up the chair for a little bit. Put the coffee down, the afternoon coffee or the afternoon sip that you're partaking in right now, and just lean in for a minute. Many business owners, they work really hard, they serve, they add value to others, and they get paid for that. But one of the things that they're really missing in building their net worth is their retirement savings. Retirement savings is essential as a business owner. Many of you may have left corporate America or left a 9 to 5 type of job, and now there you have a 401k. And now that you are working in your own business, you probably have not thought about that. But believe it or not, having a retirement plan as part of your business strategy is one of the best ways to multiply your net worth. I'll tell you more. So how can the government help you with this? I have this slide and it says, let the government help you. And you're thinking, really? Let the government help me? Yes. There's several types of investment vehicles that you can use as a retirement strategy. I'm going to focus on two today: the SEP IRA, the individual retirement account, and the solo 401k retirement plan. And you said, wait a minute, did you just say 401k? I'm a solopreneur. It's just me. How can I have a 401k? Believe it or not, the government allows you to have a 401k and a 401k that is very similar from the one you left in your corporate job or your 9 to 5 workplace. The 401k retirement plan is the favored retirement plan, even though it is a little more complicated to set up and maintain. Both plans, and today I'm only going to speak about two because this presentation came out of the fact that I got several questions about, how can I save for my future as a business owner. So I'm going to talk about the two most popular ones today, and that is the SEP IRA and the 401 retirement plan. Both, they create tax deductions for the money you invest into the plan. They grow as tax deferred inside of the plan, and you pay taxes only when you take money from that plan, similar to your 401k that you had in your corporate job. I'm going to give you an example. For example, if you invest $1,000 per month and you're in the, say, 40% tax bracket, and that's combined state and federal, and you earn 10% on your investment at the end of 30 years, you would have had $1.58 million after tax dollars. If there's no government help, you still earn 10% on that $1,000 per month, but instead of the 10%, it will now be considered more around 6% after taxes. You're now at 960K roughly without the help of the government, without the help of that tax deferred avenue, which is about what? $630,000 that you've left on the table of after tax dollars that you can benefit from. Think about that. What can you do with an extra 630K? So I'll move on while you ponder on that. And we'll talk about which plans are best for you next. Okay. And there, as I mentioned before, there are many, many choices that you have. If you have no employees, or if you have several employees that are working for you, the type of plans vary. And it does not matter what your business entity structure is. Okay. So let's say you choose between the SEP IRA and the Solar 401k. The SEP IRA is easier to set up than the 401k because the 401k requires additional reporting. The 401k, in a 401k, the goal is to stash away as much cash as possible. And then the 401k is better for you if that is your goal. If you decide, you know what, I'm making this money, but I want to stash away as much as possible, then I would recommend the 401k as the better option for you, especially if your income is on the smaller side. With the Solar 401k, there are annual contributions that you can make. And your contributions are from two sources that you can make into that plan. So you say, okay, how can I do that? You can make a contribution from your W-2 income or from your net self-employed income. But this is where the sweet part is. You've paid yourself, say, 28K. Now, your company, depending on your age, can match that 28K as part of your contribution. So you've paid yourself 28K. I'm going to repeat that. You've paid yourself 28K. And you said, you know what? I want to put all of that into my retirement. Depending on your age, you can be eligible to do so. However, your company now can turn around and match that 28K. So what is it you have now that you've just put away? 56K that you put away tax-free. Imagine that. You make the contribution and your business makes the contribution. For your business, there is a cap. So I just used the 28K as an example. There's a cap of 25% or 20% if you're going on your net self-employed contribution. So tell me, how is that? Sweet, right? So let's move on. I'll leave you to ponder on that too. So next we'll talk about what I've shared with you today. I've shared with you that you can get paid and also have a tax deferred contribution, nice sizable amount, especially if you decided to opt in for a 401k, pay deal with the additional filings, have a professional CPA set that up for you, or you can do the SEP individual retirement account. It's simpler to set up, it's less costly. However, you're on the SEP IRA. That's what I forgot to mention to you. On the SEP IRA, there's no, there's no, there's no contributions from yourself to be matched by the employer. The employer is the only one that makes the contribution, and the employer, which meaning in this case your company, if you're a solo if you're a um, employee, and but however with the 401k, you make a contribution and your company makes a contribution, your business makes a contribution. With the SEP IRA account, only your business that can make a contribution, and there's a cap which is about 20% of your net profit. Okay. So, as I said, I just wanted to keep you here briefly today. However, if you really would like to learn some more about retirement and how you can stash some cash for later years when you don't want to do the grind anymore, comment yes in the comments below, and I'll DM you to set up a time for us to speak. At this time, I'm going to pause to see if you have any questions at all. Okay, I see one question coming in, and the question is, can I do a catch up in either plan? And the answer to that is no. The SEP IRA does not allow you to do a catch up. However, in the 401k, you can do a catch up. And the catch up is if you're 50 or older, depending on the year. This year in 2003, the government allows you to do a catch up of an additional 7,000. Okay. Hope you find that helpful. Was there any other questions? Well, my friends, I thank you so much for joining me today. And as I said, if you would like to learn more or like to know how you can set up your own retirement plan in your business and save, not only save now on taxes, but you're saving for your future self as well. Comment yes in the comments below, and I'll DM you so that we can set up a time for us to speak more. Talk soon. Bye for now.